everyone, and welcome to Everything About Wealth, the podcast. This podcast is focused on wealth building, and I'm your host, Desi Troncoso. This is episode number 8. If you were with us on our last podcast, episode 7, Denny and I interviewed securities attorney Jean Trowbridge with crowdfundinglawyers.net. It's a great episode, so make sure you check it out. In this episode, Denny and I will talk about what you need to know about working with a sponsor. A sponsor is the person who finds the deal, puts it together, and makes sure it meets the projected returns. This is a call that will be very helpful to investors looking to invest in deals passively. If you don't already, make sure to follow us on Instagram and Facebook at Everything About Wealth. So let's get started. Hey, Denny, are you there?
Yep, I'm here. How's it going?
Everything's going great. How about with you?
Hey, it's August. We have, a hurricane's coming to Florida now?
Who knows? It's a tropical storm, but they said it may get bigger.
Uh-huh.
So we're still waiting.
Got it.
But you know how the waiting game is. You look at the news and you don't want to work all day.
Oh, yeah. No, really, like I said, if a hurricane comes this way again, I really just want to get out of here because, you can't work. There's really nothing to do. You might as well just be on vacation.
Right, yeah.
Or looking at a different market.
Yeah, it's definitely a conversation starter.
Yep.
Like when we go into even the gym nowadays, they ask us, hey, how about that storm?
Yeah, are you prepared?
Are you prepared for it? And we're kind of like, oh.
Yeah, and I don't want to get bogged down on it because, the news, they're just going to hit this every minute of every day.
Yeah.
They're going to be talking about it, and then it's just going to take all day. So I don't even want to look at the news. I haven't even watched where the trajectory is until today, and people have been talking about it for days. So, but either way, what are we talking about today?
We are talking about what are some of the items or things that investors should know or need to know about working with a sponsor.
Yeah, sounds like a good topic.
It is. It's a very important topic.
Okay, well, where do we start?
I think one of the first things that a lot of times people ask is, okay, I know I'm an investor and I'm going to be partnering with someone to buy a multifamily property or whatever real estate asset you're looking for. So one of the questions that we should ask is, what is a sponsor?
Yep, that makes sense. That's a good way to start. So a sponsor is a person, if you are an investor, you have capital, and you're looking to invest the money, a sponsor is a person that's going to go out and try to find investment opportunities. And then what they're doing, they're going to put a group together. So a sponsor could be a company, a group of people, or it could just be one person that owns that company. So it just depends. And then that sponsor is going to look for deals. They're going to underwrite it or analyze it, make sure it's a good deal. Then they're going to find capital, whether it be like a mortgage, like a bank debt, or equity through investors, to close the deal. They're basically going to work that whole project, do the due diligence, once close the deal with investors and the bank, and then help operate the deal from beginning to end. So this is the person that has a lot of responsibility.
Yes, I was just about to say that. What don't they do in a deal, right? Seems like they're really driving the entire deal flow all the way through purchasing and due diligence. So it seems like they're very involved with it. And so that's why it's very important when you are partnering with a sponsor, you partner with the right one.
Hey, yeah, that's 100% true. A good sponsor has a person of integrity, a person that's responsible. They have some type of experience in the sector. A track record is really what you're looking for, and that they've done education on the topic of whatever they're trying to raise. So sponsors could be, they could be raising money for a business. They could be raising money for an office building purchase. They could be raising money for one of the most popular things right now, which is apartment buildings.
Right. Another thing is, a good characteristic is, what is their communication style? Mm-hmm. So how are they communicating with you or plan to communicate with you in the future? Are they someone that is going to be just sending reports by email and you have questions and that's the best form of communication with them? And are you comfortable with that if you're someone that likes to talk on the phone?
Exactly.
Or are they going to be someone that's more where they have their meetings by phone, where they go over information, but maybe you don't have time to get on the phone all the time, so you prefer emails.
Exactly.
So it's just one of those things that you have to ask them in the beginning so you understand the expectations of how you're going to communicate with them about the deal.
Exactly.
Great. So now that we know what a sponsor is, can you tell us a little bit more? What are the characteristics of a good sponsor?
So the characteristics of a good sponsor are, number one, you want someone that's experienced, that has a track record, that's done this before, and in the particular asset class that they're presenting, that they're buying. If you're buying office buildings, they should have some experience with office buildings, or someone on the team, sponsor team, should have experience with office buildings. Same thing with multifamily. What's their background? Is their background in real estate, or is their background in business? If they've done something like this before, or that would be great. But if they haven't, maybe they work for a company that has been buying apartments or buying office buildings. They have some business experience. You want to look at all that, right? Because they say that the most important person about the deal, or the most important thing about the deal, is the management team.
Right.
So you really need to take that
into consideration. Great. What do you think about like communication style or personality style?
Communication style and personality, really, I'd say this is even the most important thing, because people say it doesn't matter how much you know until they know how much you care, or something like that, the saying goes. This is a marriage. You're going to be buying a deal, and an investment of this type can take anywhere from 2 to 3 years on the low end to 5 to 10 years. So you want to make sure that this is someone that you're going to be able to have a relationship with and get along with and communicate with down the line. Their personality may not be, they may be a person of integrity, number one. You want to work with someone that you trust. But the second thing in the end is really, are you going to be able to get along with this person? Sometimes the personalities, your personality may not work with someone that is tough, is short, they don't speak well. You may be a person that you like to communicate on the phone, or you have a lot of questions. So you want someone that's a bit more patient to work with you. And vice versa. You may be a person that you like get straight to the point, don't talk a lot. And if you have a sponsor that they're very detailed, they follow through a lot, they explain things a little bit more than you want it, then you probably don't want to work with that person unless you can deal with those things.
Right, I agree. And of course, the main thing is they have integrity, but the communication, the personality style, when it comes to defining good sponsor, I think it really just depends on each individual person, and again, how you get along with that other person. But always make sure you have someone with integrity, because you want to make sure you're doing someone who's doing the right things.
Yeah, I always tell people do business with you for two reasons. They like you and trust you. So exactly what we talked about.
Very good. Now, I do have a question, and I know some other investors may have this question as well. I know that there's a lot of partnering going on out there, which is great because, like they said, you sometimes can't do these things alone. So when there's two business partners in the deal, how do you go about finding out if it's going to be a good fit for you? What are your thoughts on that?
Well, you need to know who's going to be running the deal. You need to know the resume of the entire sponsor team. So if it's 2 people, 3 people, 4 people, you really should know who's part of it. More of who's going to be handling investor relations if it's more people, but you need to know who's going to be part of it and who are the point people. If you have one person in front of you that you're meeting, and then they're the person you're going to be working with, that's great, but there should be a backup person that you should be able to talk to as well, have a conversation with, and make sure you're going to be able to get along with them too. I mean, different reasons. But the worst case is maybe the person passes away, dies, so you need to be able to have a backup plan, because this is your investment and this is something you're going to be doing long term.
Yeah, I completely agree with that. That's great advice. So, I mean, we're looking for this great sponsor. We're ready to work with someone, we're ready to partner with them. Where do we find a sponsor?
Well, there's so many ways to find a sponsor. Right now, we live in the information age, the age of the internet. So I think this is a great way to find a sponsor online by, basically looking at maybe Facebook groups or local organizations in your area. It could be investor organization, but I would if it's an investor club, I would really try to look at something that's focused more on commercial real estate, because typically residential, they're not really doing sponsors. Sponsors are working on bigger deals because that's where enough to give a return to an investor. So that's a good way. I mean, in your community, referrals are fantastic.
Right.
I mean, talking to other investors, other people that maybe invest passively, or maybe talk to other professionals in the area, your accountant, your attorney, and ask them, look, do you know any sponsors that are putting deals together? Another thing really is to network in the community. If you can go to some of these groups, some of these associations, and talk to people and see if anyone actually does this. And then, it ends up being a numbers game. Then you need to look for a fit of a person that's a good fit for you. Some other areas are maybe real estate events. There's conferences sometimes around the country that you could attend some of these events and just be flat out and say, hey, talk to people, build in conversation. Yeah, I'm looking for investments to be a passive investor. I'm looking for sponsors, and then you can say what type of experience you're looking for, have an idea. And the last one is the one that's getting really popular now, and it's crowdfunding. It's kind of an easy way to find deals. You go on these crowdfunding platforms. There's several out there, and you can find sponsors through these platforms where you can invest money in those deals.
Yeah, that's becoming a big group of investors. I think is starting to get more popular. Has more investors are trying to find an easier way, right, to be able to place their capital in outside or diversify their investments.
Yeah, I think it's a great way to do it. It makes it a lot easier. So it's definitely getting very popular.
Very good. Okay, so I want to go, and you told us some places that we can go find a sponsor. Now, how do private investors start building a relationship with these sponsors so they can make sure that they are on their list for their next deal?
Great question. And the first one is, if you've met a sponsor, you have their business card, you want to visit their website and see what information is on their website about them and their company, what they're doing. Maybe they have frequently asked questions. You want to go through that. With the sponsor, I'm a person, I like to meet people. If you're in my geographic area, and I meet with them one-on-one, have a conversation over a cup of coffee, ask them questions, and we'll get to questions in a little while, what type of questions, but really have a one-on-one conversation. And as you're having a conversation, just think about it. Is this a person that I could do business with? Later down after the meeting, also think about it again. Could I work with them? Do I trust them? Do I feel comfortable with them? If you can't meet with them in person, Skype, number one, right? Have a video chat, or in the worst case, have a phone call. But you always want to have one of the three. You always want to talk to the person because you want to hear them out, and you want to have the conversation about how they work and how you're looking to explain what your goals are to see if they're aligned. Basically.
Right. And a lot of times, what we do and what we've seen, I know Denny, he's very involved with investor relations. He puts together a PowerPoint presentation, and then from there, after the initial meeting, they'll have more of another meeting regarding the company and what we've done in the past as well, to go over how we structure our deal, how we work, because every sponsor is different, right?
Mm-hmm, exactly. Yeah, so what we try to do is, number one, to build a relationship, partly because that's the right way to do business, right? Because you should know who you're going to be working with. But at the same time, there's some securities laws that you need to follow that you should be building a relationship with people before presenting an investment to them. So we follow that, and we have a conversation. We make a presentation of some of the things that we focus on, the deals that we're looking for, some of the things that we've done, and then at the end of that, we explain, is this something that you're interested in? And the person, says yes or no, and most of the time it's yes. But then in the end, what we do is we look at specific deals. So we say, well, look, this is the easy process. I'll keep in touch with you. We send out, like a quarterly newsletter. We keep in touch. When we have a deal, we're going to send you an email and call you on the phone and just say, look, we have this deal. Is this something you're interested in investing now? And then at that point, you could, thumbs up or thumbs down. It's not personal. It's just a deal. Just like maybe looking at the stock market. Maybe you want to buy some stock or you don't. And the good thing is what I would recommend is, and this is part of what we're going to say, is to make sure to explain why this deal may not be for you. All right, maybe say, the returns are a little bit lower, or I'm not comfortable with the location. Maybe I don't want to invest in this type of asset. Could be 101 things. Maybe you have your money tied up. You say, you know what? Oh man, I'm so interested in the deal. I think it's a great opportunity, but I don't have any money right now because I invested in this other deal, or I use my money for something else. So I think communication with the sponsor, once you find a good one, is really important too.
Yeah, I agree with that. And I think also that goes in building the relationship with the sponsor is that they can trust in you to follow through once you said that you are ready to move forward on a deal, right? So I know sometimes people will say, hey, I have this money aside, so when you have a deal, I'm ready to go. But then when you call them and try to follow up with them, if there's no response back, then it's, okay, what's going on? Are they really interested in doing a deal? But then the sponsor's not going to keep you on their list for the next deal because really they don't know if they can trust in that relationship at that point, right?
Yeah, and the really more important thing there is, a sponsor, we want to have 1,000 people on our list that can invest $50,000. But what happens is that when we get a list, there's also quantity, but there's also quality. And then with the quality, I mean, you're probably a great person, but can the person invest? Because when we're out there looking for deals, we're spending money on marketing, we're spending money on due diligence, and we're saying, and then we come up with an idea of the amount of capital that we have available with our investors and with our own capital. And we say, okay, well, I can buy a deal right now for $5 million because of the capital that we have available. Now, if we do all that effort and work and find a great opportunity, and then you can't close on it because you don't have the capital, I mean, that's just such a frustrating situation that we want to prevent. So for that reason, I think it's great to have communication and just be upfront why the deal works, why it doesn't, and if you have capital available at the time or not.
Yep. Very good. Thank you. Okay, so now we know how to build a relationship with the sponsor. Can you go over a little bit more on why a private investor, what are the benefits of working with the sponsor versus me just going out and doing it on my own?
Yes, I think there's some different benefits, right? Number one, doing it on your own is going to take you a lot of time and effort, right? If you're a business person, if you own a business and you're running your business on a day-to-day, then you have to go look for deals in the evenings and on the weekends. Do you have time for that? If you do, great. If you don't want to do that, then I think passive investing is a good option for you. Because we, as sponsors, we're looking for deals, on a daily, weekly, monthly basis, and we're spending a lot of time and effort to find one great deal that meets the returns and the requirements for investors. So maybe we look at 500, 1,000 deals to find one that works, especially in the market that we're in, right? We're in a very competitive market.
Yes.
So especially in this market, and also you need to be even extra cautious. So I think you need to look, the reasons for working with a sponsor are because of the deal flow. So you don't have to worry about doing that. Another thing about it is you need education, right? So you're going to have to, before even the deal flow, you need to make sure that you get the proper education so you're underwriting these deals correctly. So when you see a deal, it's really a deal, not a dud, right?
Right.
So you prevent all that. Now, I think there are some benefits to finding the deals on your own because you get all the profit on your own. But then you do have to do all of the work also throughout the deal.
Okay, great. Now, we've gone over that. What is the difference? Because there's a lot of different sponsors out there right now. So I know there's big companies, right, that are working with private investors raising capital. And then you have smaller sponsors that are more the boutique. Can you go over the advantages of working with a big company versus a smaller company?
A great question. So there's benefits to each one, right? So everybody has their strengths and their weaknesses, and I would say some of the strengths or the good things about a big company are that they're going to have a longer track record. Typically, they've been doing this for maybe 10, 20, 30 years, versus you have a sponsor that's smaller. Maybe they've been doing it for 5 or 10 years. So you're going to have a shorter track record. And then track record is important. So you can have somebody that you can keep maybe buy properties with maybe lower risk, someone that's done this several times over. Maybe you're going to be able to get larger deals by working with a larger sponsor, because since they bought a lot of deals, they may maybe focus on bigger properties that are, instead of $5 million, 10, 20, 30, $50 million. With a big company, there's a possibility, in not all cases, but you may have lower returns because now they've done this before. They have a strong track record, so they may be offering some lower returns for you. This is not always the case, but you need to evaluate that. The company may be too big for individualized service, so you may not be able to speak with the president one-on-one if you have a question. You may need to focus on spending time maybe with an investor relation person. That could be a college student out of college. Nothing wrong with college students, but maybe it could be someone that doesn't have as much experience. You're not working with the head person and talking to them. And then the next thing is with larger companies, they require bigger investments. They may not allow a $25,000 investment or a $50,000 investment. They may require a $100,000 minimum. So if you don't have that amount of cash, maybe starting off with a smaller company first and growing it may be a better option. And lastly, something that comes up with larger companies is that they invest maybe over a larger geography. Maybe they invest internationally. Maybe they invest throughout the United States. And maybe that's something that you don't want to do. Maybe you want to invest locally. So a smaller company may be able to offer that for you.
Yeah, and if I can add one more, I think I've noticed with bigger companies, their platforms, they have very innovative online platforms where you can go in and basically the dashboards that they have available, which are user-friendly, right? Mm-hmm. I've seen a lot more that with the bigger companies versus maybe the smaller companies. They just send you the reports on a monthly basis, but it's not an online dashboard where you just kind of go on and sign on whenever you want to check in on a property.
Mm-hmm. Yeah, exactly. They may have better technology because they're a larger company, so there's sometimes also there's bigger fees too for that.
Right.
But you're getting some benefit too with the technology investment. Now, something about some benefit to small company, and that's what we are. We're a small company. We're a small sponsor. I'd say you get more personalized service from the management team. So you're gonna be able to talk one-on-one with the president of the company, the investor relations person that's actually working on operating the deal. So they're going to know firsthand knowledge of what's going on. You can have those conversations if that's something that is important to you. You can invest in your own backyard. So typically smaller companies, that's what we do. We invest in our own backyard, close to our area. And that gives us a little bit of some competitive advantage that maybe bigger companies don't have, because we know what's going on in our own backyard better than they are, because we're here, we're local, we can get localized information. You may also be able to get some higher returns because since we're a smaller company, we're aware of that and we want to attract capital to our deals. So we want to be able to offer a slightly higher internal rate of return to be competitive. And we want to look for deals that have a better return as well. And one thing I already mentioned is the amount of money that you may be able to invest with a smaller company like ours, which we would accept a $25,000 investment versus a larger company may start, at a higher amount, like 50 or 100K.
Now, I know this is a question that some people may have. Does a big company mean bigger properties, or do small sponsor companies also invest in big properties as well? And what I mean by big properties, 200, 100 plus units.
No, definitely. I think smaller companies do also invest in 100, 200 units. So that's not something that a bigger company is going to have on its own. So that's something that it would be on a deal-by-deal basis that you need to look at.
Exactly.
And then also one thing I'll mention for sponsors that are some of the online crowdfunding companies is that if you want to invest maybe as low as $500, there's sponsors out there or crowdfunding platforms that will accept such a low investment. All right.
Great. Now, we have all this great information about finding a sponsor, what the differences are between a bigger, smaller company, so we can find out what's the best way for us to go depending on our comfort level and type of service we want at the end. Now, I think it's important because I'm always talking about this. I feel like a broken record, but as a private investor, there are some things that you should know. And what I mean by things, right? What are things? There's some items that you should review for the deal, because as a private investor, and even though you're passive, it doesn't mean you're blind. You have to know what's going on with the deal, because how do you know the deal is a good deal to invest in the first place, right? Just because someone comes to you with the deal doesn't mean that it's a great deal. So we want to make sure that we give private investors the right information to also look for whenever a sponsor does come with the deal. So with that, what are some of the items a private investor should request or review when they do find a sponsor that has a deal and they come to us to ask us to invest in it?
There's a list of items. And these items, really, the sponsor team should be providing them, no questions. Like, frankly, in the marketing package of the deal, when they're providing the deal to you, they should say, we have these items available. If you're interested, let me know and I'll forward those items to you. And the list of items goes like this. The first one is the building inspection. So you want to have a property condition assessment report, they call it too, but it's just basically a building inspection. They have an inspector or an engineer that looks at the buildings and they evaluate it, and they can tell you what the condition of the roofs, of the plumbing, of the electrical, of the HVACs, and everything else in between. And you should receive that and review it. The next one is the environmental assessment. So when you're buying commercial real estate, you're looking at the environmental risks that the property may have. So there's a report called the Phase 1 report, and they review if there's any environmental contamination at the property. And that should be something that you should review and see that that was done correctly and that was completed. The next one, which is an important one, it's the appraisal.
Yes.
So you want to know the appraisal. It may be an appraisal that's telling you the exact value of the property today, which is very important. But also the appraisal may have a after repair value if they're going to be doing renovations and increasing rent within a certain time period. So that's something that the appraisal could also include. And you want to evaluate that and see what the values are and see some of the assumptions that the appraiser has. And I think the appraisal report is something a lot of people don't like to read these days, but I think the appraisal has a lot of information that you really should sit down and try to take a look at and see what the appraiser said about the property, because that'll give you a lot of information for the asset and about the market.
Right. And make sure it's correct. I mean, we've had a little run through with an appraisal we received after closing that actually had an expense for
property
taxes that were incorrect, right?
Yep. Mm-hmm.
Which meant that the value of the property was higher.
Exactly. Yeah. So you definitely want to review the documents in the appraisal report were the correct documents that were used. I mean, the sponsor should also be reviewing this, but that's definitely something to look at. You should be getting a survey. This comes closer to closing, where they basically look at make sure the property lines are correct, make sure any easements on the property are not affecting the value of the property, so you're aware in advance. That's something that definitely needs to be completed. Private placement memorandum. So if you invested money or you're going to be investing money, the sponsor should be talking to a securities attorney, and like a person like Gene, like we had on the last call, and they need to get a private placement memorandum done to be in compliance with the SEC. And this is something that it's basically just covering all the risks that the property has, all the information, so you're aware of all the risks, and then you should be able to review that so you are protected and make sure everything's in compliance. Another item that's going to be included in the package, probably with the private placement memorandum, is the operating agreement. This is the document that is typically created by the securities attorney. And what the document is basically a contract where it explains all of the rules, all of the rights of the owners of the limited liability company. So it explains your rights, it explains the management team's rights, all that is included. So you want this document, I highly recommend you get it reviewed by an attorney. So you have an understanding, especially at the beginning. After it's maybe your first investment, you've done investment several times. Maybe you can talk to your attorney and you can focus on some of the areas that you really need to look at. But this document explains your ownership, and it also is going to go over the rights and responsibilities of the management team, the rights and responsibilities of the members, which it's basically the members of the company or everybody that owns it in an LLC. Very important document.
Right, I agree with you. Another item I think also that's good to review is the trended 12-month profit and loss. And usually what we look for in the P&L, which is another way to say it, is going to be the trend, right? Is the income going up? Is it going down? Where there's some months where it was lower than other. Why? Could it be because it was the holidays? There's so many questions that you can ask, but in most cases, you want to ensure that the income is going up, right?
Yeah.
Unless it's a property that you're going in and you're aware that maybe there's some operation deficiencies that you're basically buying it to go in and correct, right?
Exactly.
But it's really important to review it to see what are those trends in the P&L.
Yeah, no, very well said.
Okay. Another item is also the recent rent roll. It just gives you an idea of currently what the occupation may be for the property.
Yeah, the occupancy.
Yeah, the occupancy and occupation. I'm looking for a job. The occupancy. What are the vacancy as well? So that gives you a little bit better idea. And then also, what are the rents? Are some people below market? What is an average rent that they're getting right now? Can that be increased? What is the market rent? And those are some areas you can identify.
Now, I mean, that's not something that you necessarily need to go out there and research and verify, because that's just the job of the sponsor. But that's something that should be referenced and explained in the package of everything that you're looking at.
Right.
So if there's a rent roll and then the rents are $500 a month, there should be a clear explanation, maybe from the in the appraisal report or something the sponsor's sharing with you, where, oh yeah, they can raise them to $750 because it's clear, there's data, there's evidence.
You're verifying basically at this point.
Yeah.
Yep, exactly.
So the next one is the offering memorandum, and this is only going to be available if the property was listed by a real estate broker or a real estate agent. If it's not listed by a real estate agent, it's not going to be available. But basically, it's like a broker package, like marketing package. They're putting out the property for sale, and they did some research about the market, and they probably put together a pro forma, and they looked at a lot of little different things about the property, and they put it in this package and why it's so great, and then you can get to go ahead and review it. The next one is the sponsor team should have made a pro forma, a projection of the property and for the amount of the time of the hold. So if it's a 3-year hold or a 5-year or a 10-year hold, you should have projections on how much the income is going to be every single year and how much the expenses are going to be every single year, and then based on the expected sale date, what the returns are going to look like. So I should have a lot of information on the projections, and that's something that you as the investor should be really looking at with a fine-tooth comb, because that's going to be based on what your returns are going to be for the property.
Right. Yeah. And then another one, right, is a capital expense budget.
Mm-hmm. And that would be part also with the projections.
Yep.
Would be in there.
It includes more. If you're doing renovations on a property, you'll see more of the larger items. Maybe there's some HVACs, a roof, etc. That needs to be completed. So they're going to put those funds inside of the CapEx budget, especially if they're raising the funds on the front end. Mm-hmm. But also it's good to know what they're going to keep in the capital expense budget. Sometimes reserves, capital X, sometimes people put them together, right? Mm-hmm. But you want to make sure that they're keeping a sufficient amount on the side so that any repairs coming up in the future, there's funds there, mm-hmm. right? You don't want them to have what we call capital call, which means they call the investors and say, hey, we need money to go fix this. And, mm-hmm. As an investor, you don't want that call, right?
Exactly.
So you want to have an idea and make sure that they're putting some money aside for the capital expense budget.
Exactly.
And we kind of went over this. I kind of said like the renovation, if there is CapEx, may or may not go with that. But if you are going into a property, you just want to make sure that they have included what their plan is, what the budget is. Maybe they're going in to turn the units to make them more updated. Maybe they're taking it from a C to a B property because they're wanting to put granite in it. They're wanting to offer other services. Like we've seen even the new ring, where the doorbell, where it goes to your phone and you see who's outside. So there's a lot of different.
Yeah, to make it smart, like, I mean, that's some renovations that are going on where they can control the AC,
Yeah.
and different things like that. But you want to make sure that the budget makes sense and that everything's budgeted correctly. Like, if you may be able to check if they're saying, oh, no, we're going to be doing HVACs and we're replacing them for $3,500. You say, okay, so how, what's the tonnage and how how do you know it's $3,500? Maybe in your area that ACs go for that, so you can confirm it. But if they say it's $2,500, you're like, wait a minute, how are you going to replace an AC for $2,500? I mean, so then that way you can ask the question, and they may say, well, we're a licensed HVAC company, so we're going to be able to save on the cost of that. So it's like, oh wow, that's great. And last but not least is the resumes for the entire team. So you want to look at everybody that's on the team, who's part of the sponsor team, but also an explanation or a little bit of a summary who else they're using. Maybe, the attorneys, the management team, and so on.
Right. And I know it seems like a lot of items, but we're going to have this information within the blog on our website. So you can see what items to request. So you have a checklist, basically, because I know it's a lot to hear over a podcast.
Yes. Yes.
And like me, I'm a checklist girl, so I know how it feels to need something to check off.
Yep. Exactly.
All right. So now that we know a little bit more about what are some of the items we're going to look for or from the sponsor, how about information on how the deal is structured?
What you're looking here is you're looking at the different risks that the property has, or whatever your investment is. If it's a business, if it's real estate, what are some of the risks of that type of asset? And then one thing is called it's a structural risk. So how are they getting paid? How are you getting paid? Is it structured with the right incentives, such as the ongoing ownership of the sponsor has skin in the game that motivates them to perform? So basically, if the sponsor didn't put any money in the deal and the deal starts going south or starts getting tough, what is their incentive? Do they have enough profit later down the road where it motivates them to make sure that they keep an eye on the deal? You want to review that, because that's something that it keeps, people are money motivated. And even if they have the best intentions, they may get busy. But if they have their money invested in that deal, or they have a big profit at potential in that deal, then they're going to spend a lot more time on managing the deal and make sure to bring it home. Now, something else you need to be aware of is market risk, and you need to evaluate what happens if this deal, if rents go low. What's the break-even point of the deal? What are their interest rates doing? You need to be aware of that. How are they going to handle if interest rates go up? If they have maybe a variable rate loan, if they need to refinance at a certain period, how will all that work? Right,
because usually in some, there may be where they have a balloon after 3-5 years. So you want to understand more about, okay, well, what happens after this term, right? Are we refinancing, or is the plan to sell?
Yeah, and you'll know that ahead of time, right? What the investment goals are. Maybe it's a 3-year hold and then sell the property.
Right.
Or maybe it's 5 years, and then you have to do certain things within those 5 years. Mm-hmm. And the other thing you need to be aware of is, depending on the asset that you're investing in, some of the risks with that asset. For example, if you're buying multifamily, you know that multifamily is typically lower risk because there's a lot of demand for apartments. People need a place to live, and they do well at the top of the market cycle and at the bottom of the market cycle.
Right, versus other asset types such as like office buildings, which may have a higher vacancy in the bottom of the market cycle.
Correct.
Right, so you really have to understand how that moves up and down and which one may be a better risk for you. What about development?
If you're investing in it, you need to understand some of the risks involved. There's a construction risk because the property is going to be under construction for a certain amount of time, and there's not going to be any cash flow for that amount of time. So if you're a cash flow investor and you're looking for just to get a return every single month, maybe development is not for you if you're not willing to wait a year or 2 years while the property is first built and then leased up. Something else that there's also entitlements, and there's also environmental risks. So entitlements mean that they have to, maybe if they're buying a piece of land and they're saying they have to change the use on that property with the local county, the zoning, then that's another risk that you need to be aware of, because will they be able to do that? Maybe they won't, and then if they can't, then the money for that investment is gone. So development carries more risk than buying an existing property because there's so many variables that you're basically trying to put something that's not there and bring it to an operating asset. It's basically like starting a business from scratch.
Right. And there's also, I think, location risk as well that private investors should be. You don't have to be the expert in, right? But maybe they will give you some market research, or you need to look up yourself to learn more about the different markets that are out there, where the asset is currently located, and how that may affect them. Correct?
Yeah, because there's around the country, there's primary, there's secondary, and there's tertiary markets, and you, depending on where the property is located, the larger the market, the better, because there's more people, there's more jobs, right? More stability, and then less risk for you and for your money.
Right. Depends on how quickly it can sell because of how people are attracted to that market.
Exactly.
Right.
Exactly.
And then other things to consider too is the market growing, jobs and population. Are they coming in or are they leaving?
Mm-hmm. Yeah.
You definitely. I know. Sometimes we see a deal, and we're like, "Wow, what a great deal! It's so cheap." When you look at the market, it's because a lot of people are leaving the market, right?
Exactly.
So the value, of course, is going to be a lot cheaper than in most areas where it is more attractive to invest in the property.
Yeah, I think in the end, do you want to get on a sinking ship is the question.
Definitely don't want that. Definitely don't want that.
Yeah. Mm-hmm.
And then, of course, you can be familiar, and I think we've talked about this on other podcasts. Is it Class A, B, C, D, where the area is within the market? So you have a better idea of what the rents are. Why are they so low, right? Versus other areas that may have a higher rent because it's more of a Class A property that's new developed. Mm-hmm. But it carries some risk because if you have a D property or you're located in a D area, it may be harder to sell when it comes to selling the property. Right,
exactly.
In the future. So those are some things to consider based off of what the exit strategy is within that particular investment.
Yeah, and then there's so many more risks. I mean, like we can kind of go down the line of so many other things to consider, but you just really need to be informed and aware of what you're getting into because you're putting your capital to work. I mean, everything has risk, so it's just kind of part of the game, but the key is to be informed and aware so you can manage it the best way possible.
I agree. Great. So I know that was quite a bit of information, and I hope that helps everybody whenever they're working with a sponsor. We do just want to go over, we have a list of questions, right, that we have whenever working with a sponsor that is almost, I think, over 60 questions of what you should ask.
What we did, we put the list of questions together where these are some questions that investors have asked us prior to investing with us. And also, these are some questions that we would ask if we were going to be investing in other sponsors' deal. And like basically, these are some questions that it would be great from investors to make sure that they ask, and so they can make sure to be informed and have all the information they need to make a decision.
Right. And we're not going to go through all the questions. If you want the questions, you can email us for the list of the questions. And
yes, you can email us at everythingaboutwealth@gmail.com for the list of questions.
Okay.
So
we're just going to go over some important questions, though, from the list.
Yes. And what's the first one?
The first one, which is my favorite because I'm always talking about it. What reports should I expect and how often? And what happens if this is not met for several months? And the reason this is important, you just want to know how you're going to be receiving the information about the property. For us, we feel more comfortable receiving monthly reports, and I think a majority of investors that we've worked with like to see monthly reports. There may be sponsors out there that offer it on a quarterly basis, and you have to ask yourself if you feel comfortable with that, because you really don't know what's going on with the property during that time. But you want to know that up front so that you're not freaking out if you're not receiving a report, or if you're supposed to be receiving a monthly report, which we recommend that you are receiving them, so you understand what is going on with the property.
Yeah, there's different sponsors do things different ways. We typically do a monthly report with a summary of what's going on at the property, what's the occupancy rate, and then we'll also share the profit and loss. Some sponsors, they'll just do a monthly summary, and then they'll do the profit and loss on a quarterly basis. So it's really everybody has different flavors. So just see what you're comfortable with and how informed do you want to be. But the reason I ask these questions is because this is really important, because some sponsors out there may not do monthly reports, they may not do quarterly reports, they may do as I get to it reports. And frankly, I wouldn't want to be involved in something like that, an investment like that. So you want to ask those questions up front. How often are you going to be expecting them? And then when are you going to be expecting them? Probably get that in writing. This should be in part of the marketing package for the sponsor. But then after that, what happens if it's not met? Because you want to be able to hold the person accountable. And I think one of the things is to be able to contact the property management company directly and get that information. So that should be spelled out in the operating agreement of the LLC. Other questions are, have you ever filed for bankruptcy? If someone is investing money with a sponsor, maybe you don't completely discount them if they filed for bankruptcy, but you want to know why and what happened and how did they handle that. Like maybe if they were doing investments in the downturn in 2008, a lot of people didn't do well in 2008 that were investing. So maybe they could explain some of the stories. And then at that point, you can also see if you feel comfortable with that person. If they went bankrupt because they got into a lot of debt that was personal debt and they don't have a good story and it doesn't make sense. And you're like, okay, well, this is probably not a person that I want to invest in. So you want to ask those different questions.
Another question is, what are the outcomes of other investments? This just gives you a better idea on what some of the exit strategies the sponsor may have used for other properties. And also, it's good to follow up to see if there are any other investments that basically didn't meet what the goal was, what the exit strategy is, and ask them why. And then also if they overcame it and what the result of that property, so you can understand more about how they are handling some of the issues that may come up while you're holding an investment.
Yep. And were they successful before? That's really important. Have they done this before? Maybe they say yes. I bought this property. We bought it. This was the goal. We completed it. There were challenges. Like everything has challenges, but we completed the goal. Investors got their return. That's also something that you definitely want to hear. The next one is, what happens if I need my money from this deal before the investment hold period? Now, real estate investments are a non-liquid investment, so you typically are not going to get your money out of the investment. But you want to ask this question because you want to see what the response is from the sponsor. Like if someone asked us that, which I've had someone ask me before, and I'd say, look, the investment is not liquid because we have a hold period and we have a plan and we need to execute it. But if someone has a situation as an emergency that they can't control, I will do my best to try to find a way to return them their capital by substituting an investor, by finding somebody else to maybe take their place in the investment. And that would need to be worked out on a case-by-case basis. But you want to have a conversation with the person, because if they're saying, well, no, you're not going to be able to get it out in that period, then you're like, okay, well, this money's going to be locked in for 10 years or for 5 years or 3. If you have any emergencies, you better not need it.
Are returns guaranteed?
This is something you probably want to hear no, right? Yeah, because you really want to ask this question to see if you're working with maybe somebody that's getting started. Have they gotten the right education? Are they informed? And you may have known a little bit about this, but if someone's talking to you and you make a short conversation that you're looking for passive investment, they start talking about guarantees, and you probably don't want to invest with them because nothing's guaranteed, and you can't guarantee returns because the market can change. Deals have failed that had every single thing that was positive, but the market just worked against you, so nothing is guaranteed.
Right. Another good question is, how do you make money? This is asking the sponsor how they are making money in the deal. And you just want to know, are they charging any upfront fees, what those fees may be? Also, are they charging any asset management fees during the duration of the investment? And what are they getting out of it? Is there an ownership? How much their ownership is? Just so that you can take into consideration, make sure you want them to get paid at the end of the day, because that's how they do a better job. But also, it can affect the return, so you just want to take into consideration and understand what they're getting out of the investment.
One of the last questions we'll cover is, how does the process work once you have a deal? So you definitely want to ask them that, because you want to know when they have a deal, what are they going to do? And you want to be aware of the process. They may tell you, well, look, I send out an email and then I follow up with a phone call. Or they may tell you, oh, you need to go on our website and stay abreast of the deals. And then you log in and you get the information. Or we set up a one-on-one phone call, or we set up a one-on-one meeting. So that way you have a better idea of what you need to do. And that way you can accomplish your goals of maybe if you want to learn more about the deal, how that will work, any other future steps.
Right. Yeah, and like we said, there's a lot more questions you can ask. I don't know if you're going to ask all of them, but it's a great reference in case there are some that you want to take with you whenever you are having a meeting with another sponsor. I know when we got started, we partnered in a deal so that we can learn more about multifamily. Unfortunately, we didn't know the questions to ask in the beginning to understand how the structure was going to be, what was involved with the multifamily project, and etc. And I know these questions would have came in handy if we were able to ask this in the beginning. So by having these questions, I think investors are able to work with sponsors where they know everything up front, and they're able to fully understand the structure and involvement of the deal so that it performs to its maximum potential.
Yeah, because by having these questions, you can make sure that the important questions that you have are answered prior to investing. As a sponsor, when we are working with investors, in our investment package, we try to answer many of these questions beforehand, so we put a lot of information in there that gives investors the necessary information they need to make a decision, and also to have confidence that they're working with a professional company and to feel comfortable investing with us. So in the end, we strongly encourage you to ask questions, as it is your money. Now, in closing, I mentioned it before, but people do business with different people because they like and trust them. So to trust them, have they done this before? Right? Ask yourself that question with the sponsor. Are they a person of integrity? With the trust also, and is what they're making fair for the deal. Does their personality fit with your personality? Desiree, and you could probably talk a little bit about this, right? Why is that so important?
I just think it's important because all of us have different personalities, and so it may or may not go with others. Mm-hmm. And it's not a bad thing. It's just, one of those things where it doesn't come together for a successful partnership depending on each person's style. So I think at the end of the day, you just have to really ask, what does your gut say? Do you want to do business with this person? Do you feel comfortable? Do you think your personalities are going to be a good fit whenever you do invest? Because like Denny said, it's a marriage. You're going to be with them for the next 2, 3, 4 years, however long the hold is. And you just want to make sure that it's a pleasant experience.
Hey, yeah, pleasant and harmony. I like that. Well, guys, I think that was a lot of information on how to find the right sponsor, and I enjoyed it.
You enjoyed it. So thanks for tuning in. I hope you enjoyed the podcast today and that you feel better prepared to choose the right sponsor for your next deal. To learn more about real estate investing or how to be a capital partner, make sure to visit our website at www.everythingaboutwealth.com. If you like the show, make sure to subscribe and like us on iTunes or your favorite app. With that, see you guys on the next show.